Visit us at venturalaw.com.
Our next guest manages a college housing portfolio of over 200 properties with 7 of its top 10 university clients in the COVID hotspots of Texas, Florida, and Arizona. The CEO of American Campus Communities, it trades on the NYSE under the ticker symbol ACC, joins us now. Bill Bayless. Nice to have you with us, Mr. Bayless. First off, given so many questions right now about students returning to campus, and you manage a portfolio that includes the likes of University of Texas at Austin, Arizona State University. What can you tell us in terms of these colleges and universities' plans for the fall?
Yes, and actually at all of the 92 campuses the universities pretty much all have the same operational plan. And whether they say they're going to have in-person classes, online classes, or a hybrid thereof, what they're undertaking is virtually the same, and that is to have dual capabilities to deliver in-person or online and to toggle between the two. And so social distancing in the classroom is first and foremost. You know, your 400-person lecture halls where everybody was shoulder to shoulder, those won't take place. They'll be online. Your smaller classes, your 35 to 40-person classes, are being moved to classrooms where social distancing can be achieved. And then more importantly, the colleges and universities, while the 18 to 22-year-old demographic has been low risk in this COVID environment, for the instructors that may be at higher risk or be autoimmune, universities tend to be giving the instructors the flexibility to go online, in-person, toggle between. And so really they've created great flexibility to continue to deliver curriculum throughout the COVID environment and as it may change. And so they've really done an excellent job planning to fully incorporate the CDC guidance and a continuation of their academic operations, regardless of what the trend may be going into the fall.
Right. And so what can I expect then in a dorm at this point where, despite, I would think, the best efforts of administrators to keep socializing at a minimum, we're talking about 18, 19, 20-year-olds. You know, what are your expectations and what are you doing to try to keep students safe?
Yeah, and first of all, it's important to look at how student housing has evolved over the last 20 years. 86% of the products in our portfolio housing over 135,000 students. 86% of those products are apartment-style housing that are students living in households of only 2 to 4 people. They have a full kitchen, full living room, typically a private bathroom, or no more than 2 students sharing a bath. And then that 2 to 4 person household, they can completely control their own sanitization, quarantine, and isolate as they see fit. When you then look at the residence hall products that exist on campus, of which we also privately own a lot of on-campus residence halls, the modern products that have been built over the last 10 to 15 years feature in-suite bathrooms in all of those accommodations, which also are just households of 2 to 4. Where a little bit of work comes into play for colleges and universities is the remaining stock that they have of the older 1940, 50, 60 residence halls, where you had community bathrooms where you had as many as 20 to 40 students sharing sinks, toilets, and showers. And that, in that case, it's not a highly desirable product among students and parents. And it's not as easy to sanitize to stop the spread of the virus. And in going into this academic year, one of the major trends we're seeing at 48 of the 68 universities where we own assets, universities are de-densifying that particular product type. In total, they're taking 55,000 beds out of service out of 470,000 total to cut down the number of students sharing those particular accommodations. And those are really the only, if you have a surge in COVID throughout the year, that's the only product that really isn't conducive to be able to facilitate self-sanitization and cleaning. The other thing that we've done above and beyond just the how products themselves facilitate or prohibit good sanitization is we're unleashing a program called that we're actually doing with RB Lysol, the RB, the makers of Lysol. It's called Be Smart, Be Safe, Be Smart, Do Your Part. And the first part of that, with us doing our part, is having done a complete facility assessment and assessing all the touch points that exist in common areas, from entry to circulation to migration through the building, using antibacterial surfaces on elevator buttons, doorknobs, and attempting to create as much of a touchless community as possible. We then worked with RB Lysol to develop state-of-the-art protocols on hygiene, cleaning, in order to make sure that we can maintain and sanitize to the highest levels throughout this. On our earnings call yesterday, we told the market that's probably $2.5 to $3 million in operating costs to implement those enhanced programs.
Yeah. Bill, it's Morgan. I'm just looking at shares of American Campus right now. They're up 3%. They've been up this week. You reported earnings a couple days ago. And I think if there was a headline from that, it's that pre-leasing is solid. I wonder how much of that, though, do you expect to convert to actual final fall occupancies and ultimately to rent collections?
Yeah, and this is where we have been very pleased throughout the COVID pandemic, and also as what we're hearing from student sentiment and their parents. We're currently 90.1% pre-leased for the upcoming fall. Within that 90.1, 40% of our current and existing residents that have been with us through this are renewing and moving into the next academic year. And we continue to have good progress with the new students coming in. And we also saw that regardless, as universities were announcing their plans for curriculum delivery, whether it was online, whether it was in person, or whether it was a hybrid, with 63 of the 68 universities we serve being either in person or in a hybrid model. But even where the universities were saying they were going online, the Cal State system, the University of Southern California, we saw consistent leasing across the board. And that the consumer sentiment that we have seen throughout this lease up for fall, regardless of how the universities are going to deliver curriculum, and it's really at all schools going to be a mix. Students want to be back in their college towns and the college environment with their peers in an academically oriented environment that supports their academic endeavors. And so we didn't see a lot of variation based on the ultimate mix of in-person, online, or the hybrid thereof. It's pretty consistent.
So listening to those comments from you now, and then the fact that you basically said there's supply that's coming offline at a number of universities, what does that mean for the actual prices that students are going to be paying for housing this fall?
Yeah, the one thing that we saw is pretty consistent pricing. We talked on our earnings call yesterday that through the current lease up that we've implemented for next year, rates are at a modest 1.6% increase. And I think all companies that are responsible, this is a time to really be conscientious of the financial hardship that students and parents are paying. We actually formed a resident hardship program throughout COVID, and where 93.7% of our residents continued to pay their rent in the months of April, May, and June. That 6% delinquency is higher than typically the 1% we experienced. We as an organization, through our hardship program, we actually gave direct financial relief of $9 million to over 6,500 students whose family situation had changed. We also have a significant amount of on-campus housing that we own in partnership with colleges and universities, where the university administers the operation of the communities. And in the spring, when they were not yet well prepared to deal with COVID as they are this fall, and they went ahead and let students leave, in many cases, leave the campus, we also refunded an additional $15 million. And so we have provided a total of $24 million in direct financial assistance to students and parents. We also waived all fees associated with the payment collection of rents, about another $2 million. And so when we did report our Q2 numbers, our total revenues were impacted by about $30 million, with $26 million of that really associated with trying to be financially responsible and compassionate to what our students, their parents, were going through.
Finally, Mr. Bayless, I mean, you mentioned, of course, the fact that you are at over 90% pre-leased, at least at your same-store properties. Really going to be fewer than 10% of students who don't return to campus, despite what would seem to be the prevalence of a lot of remote learning. Is that going to be your expectation as we get closer to these colleges and universities bringing students back?
Yeah, and as you look, we're 90.1% pre-leased today, and we still have 5 to 11 weeks left in the leasing season until classes begin. And we're only 340 basis points behind our lease-up pace. We also commented to the market that when we look at our 3, 10, and 20-day trending in traffic, applications, leases, and renewals, we're actually significantly above this period last year. So we're actually seeing an acceleration in leasing velocity over the last three weeks that does make us cautiously optimistic. I mean, obviously, at the end of the day, while all the consumer indicators do lead us to be optimistic, managing students that may change their mind and no-show is certainly something we have to continue to watch through the process in terms of, as the environment unfolds, how many students continue through and come back, which our sentiment is very positive toward what we're hearing.
All right. Well, we'll be watching it closely. It's such an important component overall of the reopening story. Bill Bayless, thank you for joining us.
Thank you. It's been a pleasure.